Assalamualaikum warahmatullahi wabarakatuh. My name is Nazrah Atah binti Abdullah with matric number S62671. The company I have choose for my individual assignment is Iwin Berhad. I have searched the company that I choose, which is Iwin Berhad in Bursa, Malaysia, and I have downloaded the financial statement of the company in the Bursa Malaysia website. This is the website I have visited to download the annual report. The current tax is the expected tax payable or receivable on the taxable income or loss for the year, using the tax rate enacted or substantively enacted by the end of the reporting period, and any adjustment to tax payable in respect of previous financial year. A deferred tax asset is recognized to the extent that it is probable that future taxable profit will be available against which the temporary difference can be utilized. Deferred tax assets are reviewed at the end of each reporting period and are reduced to the extent that it is no longer probable that the related tax benefit will be realized. I have searched the comparative figures on the annual report on page 177, item number 36. It shows that the borrowing costs in relation to the overtime transfer of constructed units were capitalized. In March 2019, the IFRS Interpretation Committee concluded that the unsold properties which are being constructed but are ready to sell cannot be treated as qualifying asset, and therefore the borrowing costs which have been capitalized previously should be expensed off. The effect of correction of the errors are disclosed below. Next, moving to the MFRS company. From the annual report of Iwin Company Berhad on page 104, in notes 2, there is the significant accounting policies for income tax, which included the deferred tax. In this annual report, we can see that the company did follow the rules of MFRS guardians for their annual report. Deferred tax is recognized using the liability method, providing for temporary differences between the carrying amount of assets and liabilities in the statement of financial position and their tax basis. Deferred tax is not recognized for the temporary difference on the initial recognition of assets or liabilities in a transaction that is not a business combination and that affect neither accounting nor taxable profit or loss. Deferred tax is measured at the tax rate that are expected to be applied to the temporary difference when they reverse, based on the laws that have been enacted or substantively enacted by the end of the reporting period. Okay, as you can see, this is a note 17 for deferred tax asset or liabilities for the group on page 135 in annual report. And this is the continue of deferred tax asset or liabilities for the group at page 136. In this annual report, we can see the movement in temporary differences during the year. In this part, I will talk about the basic earning per share for the company and the analysis. In the annual report, page 154, the financial statement have calculated the EPS for 2 years. The basic EPS have decreased in small amount from 2017 to 2018. It shows that the lower of EPS, the lower of the return to the shareholders. In my opinion, the company are already do their best to the company. Okay, that's all from me. Thanks to Dr. Shayuti to hear my presentation.